The company Amigo Loans Ltd., a UK guarantor loan provider, came under intense legal and regulatory scrutiny over the way it issued loans and treated borrowers and guarantors. Key issues: high-interest loans to borrowers with weak credit, required guarantors, and concerns about affordability checks. The regulatory body Financial Conduct Authority, FCA, found that between November 1, 2018 and March 31, 2020, Amigo failed to perform adequate affordability assessments of both borrowers and guarantors. FCA. Because of these failings, Amigo faced a large volume of customer complaints, significant redress liabilities, and a need to propose schemes of arrangement and restructuring. Connaught Law Limited. In May 2021, the High Court refused to sanction Amigo's proposed scheme of arrangement. The Guardian. Why? Because the court found the explanatory statement provided to customers was inadequate, it failed to properly explain the realistic alternatives and why shareholders and other stakeholders were being treated differently from customer claimants. Practical law. Also, the court was not convinced the alternative to the scheme was immediate insolvency, meaning it did not accept that customers had to accept the proposed deal under threat of collapse. Kirkland.com. The FCA publicly censured Amigo for the serious risk of consumer harm arising from its affordability failings. FCA. As a result, the FCA called on the company to provide the best available outcome for customers. FCA. Following the earlier rejection, Amigo returned with a revised scheme which the High Court sanctioned in July 2022. Taylor Wessing. The approved scheme featured a dual outcome structure. Preferred outcome: Amigo resumes lending with regulatory consent and raises new capital, thereby increasing funds available for redress. PASL. Fallback outcome: if resumption or new capital fails, the company enters a controlled wind down, preserving value for redress claim creditors. PASL. The court held there was sufficient certainty for the scheme to be effective, despite the contingency. Taylor Wessing. For customers who believed they were missold loans, the key takeaways are: their ability to claim redress hinged on the scheme being upheld and funds being available. The earlier rejection in 2021 delayed progress, increasing risk that Amigo's liabilities would become unmanageable. The approved 2022 scheme gave a path to some compensation, but also revealed the limitations when a lender is insolvent or heavily exposed. For guarantors, because many guarantors stepped in when borrowers defaulted, the affordability failings also created direct consequences for guarantors. The FCA found that about 1 in 4 guarantors had to step in at some point. FCA. This case highlights several broader principles. Lenders must carry out proper affordability assessments for both borrowers and guarantors. Regulators expect rigorous processes. Schemes of arrangement will not be sanctioned unless disclosure is robust, alternatives are clearly explained, and customers, especially large groups of retail customers, can reasonably understand the trade-offs. When a creditor class comprises primarily consumers, the fairness and clarity of the proposition matter heavily to the court. Even when a scheme is approved, the actual payout may be far less than full entitlement if the underlying business is distressed. For anyone involved with guarantor loans or mis-selling complaints, the Amigo case is a warning. Check your rights, deadlines, and whether the lender remains solvent or has entered a scheme or restructuring. In short, Amigo Loans' court case's journey is a story of irresponsible lending, regulator intervention, court scrutiny, scheme proposals, rejection, revision, and eventual sanction under a two-outcome structure. Borrowers and guarantors ended up in a landscape where their claims were bound by the financial reality of the lender's position. For customers, understanding those legal and structural complexities helps make sense of why compensation may not match expectations and why timely action matters.